Ladies and gentlemen, good day and welcome to the Tek Packaging Limited Q3FY22 results conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the call over to Mr. Abhishek Navalgund from Nirmal Bang Equities. Thank you, and over to you, sir.
Thanks, Hemant, and good evening, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome you all to this earnings conference call of Tek Packaging for Q3FY22. We have with us Mr. Lakshman Rao, Chairman and Managing Director, and the entire finance team at Tek. Without further ado, I request Lakshman sir to start with his opening comments, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Good afternoon and welcome to the conference call of Q3 results of Tek Packaging. Thank you all for your interest in our company and its performance. I'm glad to inform you that in the Q3, the revenues are up by about 20% and PAT is up by 11%. And in the 9 months period, the PAT is up by 54% and revenues are up by 42%. This was the quarter again where the raw materials were ruling very high. In spite of that, the per kg EBITDA margin of the company could be maintained or rather little improved over the Q2. But compared to the Q3 of last year, there's a comfortable 18% up from 36.5 to almost 43.05. So that's a sizable improvement in the EBITDA per kg was achieved thanks to the robust growth in the food and FMCG sector products. So I'm also glad to inform you that the first order, commercial order for our QR coded IML packs has been received from a company which is manufacturing aqua products and nutraceuticals for aquaculture industry in the sizes of 1, 4, I think 5, 10 and 15 kg size packs, which are being produced and delivered to them in the month of February. So that's the beginning of bringing in digital packaging into the country. And many other lube and paint companies are also vying to introduce this, but owing to the COVID, they were not very actively functioning and taking trials and running trial lots in the market and filling trials on their filling lines were getting delayed. But this company being a local company and having very good outlook about traceability and controlling the counterfeit markets, they have adopted this technology, and I'm glad this will be the beginning of digital marketing of digital packaging of products in this country, again introduced for the first time by Tek. So as we go forward, I will take the question and answers to convey more information about the company prospects. Should I hand over back to the operator so that we can have questions one after the other?
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jagwani with PGM India Mutual Funds. Thank you. Please go ahead.
Yeah, hi, Lakshman. I just had a basic question. So just against our realization, what we have in each of the segments, what would be our RM cost per kg, against the segments, including all our raw materials?
Yeah, the blended raw material cost is about 110 rupees for the Q3. Compared to it was 85 rupees last year. That's almost rise of 30%.
Okay, so on a per kg basis, our RM is 110 rupees a kg.
Yeah, 120 rupees is per kg. The blended cost after affecting the SFG, FG, all that is coming to 110.
Okay, and how are we placing the RM front now? I mean, are prices still increasing or?
RM prices are still stagnant, at least for in the month of February. There's just 1 rupee price hike again. There was a little downtrend in December, but again in Jan they've raised by 1 rupee.
Okay, thank you.
Thank you. The next question comes from Archana Gude with IDBI Capital. Thank you. Please go ahead.
Yeah. So thank you for the opportunity, and I have 2-3 questions. So in the press release, it's mentioned that we have received some orders from Amul, PVR, etc. Can you throw some more light on for which products and what is the in terms of the value size?
You're talking about from the companies like PVR and others?
Amul? Yeah. Vital Pharma.
Yeah, I just don't have the exact numbers, but Amul I know is close to about 15 crores additional orders, and PVR is for starting orders. So Biostat and PVR and others are just starting. There could be opportunities of 1 to 2 crores per annum to start with. Amul I know because it was a big tender we won, so it is around 15 crores.
Sure, sir. Sir, also, we do understand this paints is slightly subdued anyways in the Q3. But then, how's this scenario in in the beginning of Jan? Is there any improvement? Also, can you just quantify how we did in paints in Q3 in terms of volume and value?
Yeah, paints in Q3, in spite of overall growth of Q3 on Q3 growth of 20% in value, in tonnage terms, paints are down by about 6.3% compared to the Q3 of last year because of the price rise that has been taken by the paint industry in the month of November. Their pickup in the month of November and December is subdued. That has impacted our sales in the paint sector, which is a major contributor to our company's top line. However, the bottom line has been well guarded by the growth in tin wall, that is food and FMCG, where we have seen 38.5% growth in volumes in terms of tin wall products compared to the Q3 of last year. So whatever the improvement, what you could see in the per kg EBITDA is mainly due to the increase in sale of tin wall, food and FMCG this quarter.
Sure. And sir, is there any improvement than what we saw in Q3, at least in the month of Jan? The Jan is almost over.
In the month of Jan, yes, things are improving. Actually, if not Jan was similar to December, November, but forecast given by the major players of Asian Paints and other paint players is much better. Rather, they are back on track, I can say, because whenever they take a price rise, a few weeks before onwards, their filling lines will take a little, cut in their productivity. But the ultimate numbers, until the goods in the transit or goods in the distribution channels are all cleared, then they start all again. So I think the trend is improving from Feb onwards.
Sure, sir. And so my last question is on this IBM. I believe that the new machinery should be operational by, let's say, April 2022. So have we received any order for that particular technology?
In the IBM, we have 3 sectors we are aiming at. One is pharma regulatory market, one is OTC products, and another is cosmetics and general FMCG goods. So in the general FMCG and OTC, we have one solid inquiry which we are about to close maybe in a week or 2 weeks, which would be almost able to fill the capacity of our pilot plant, which is coming up by April, May. And our idea was to, while these products are produced, the pharmaceutical containers will be also produced simultaneously, and clearances of all statutory clearances, DMF clearances would take about 5 to 6 months. And by that time, we will have our major plant at Sultanpur ready to go into production. So without wasting idling capacity, we'll be in a position to start off with FMCG and OTC products right from April, May onwards, hopefully May onwards. And by end of the year, we'll get the clearances from pharmaceutical companies. And by then, our expanded Sultanpur facility will be able to take up those orders.
Sure, sir. So how much is spending for these two? The one which is like will be operational by March 22 and the second by December 22. How much is the total capex for these two?
The May 22 plant, the pilot project is hardly around 9 to 10 crores. But the major plant, which is constructed in a 40,000 square feet area as a greenfield project, that will gradually in the year 22 and 23 together, there will be an investment close to around 35 to 40 crores. As the demand increases, we will be in a position to quickly add the machines. But the buildings will be ready to have the facility by hopefully around September, October 22.
Sure, sir. So thank you so much. That was very helpful.
Thank you. The next question comes from the line of Rohit Reddy, investor. Please go ahead. Thank you.
Yeah. Hi everyone. My question is for Lakshman Verma. So this is regarding raw material. Did we ever consider collecting used plastic from secondary market and recycling it into fine pallets and use them in the making molds? The reason I'm asking is, recently I came across an article from Microsoft. They are recycling ocean plastic and making products like mold and all. Can we also consider something in these terms because of volatility in raw material prices and all?
Rohit, your voice is not so clear. I understand you are asking about use of recycling material. Is it correct?
Yes, sir. Yeah.
Yes,
recycling
we
material.
actually, with the consent of some of our clients like Asian Paints and some of the FMCG clients, we are started using recycled material which is completely cleaned and provided in a very clean and dust-free and hygienic manner. Of course, the material cost difference is not much, maybe 15-20%, but that material is so clean and segregated that we don't have any problems of processing. And slowly, companies who are very conscious about cutting down or making use of recyclability, they are slowly asking us to mix that material, which we have started using for last few months. So recycling now, what it is available recycling material now is way better than what it was a couple of years ago. And there are big plants which are having facilities that completely clean the plastic, remove the dust and also any contamination, and provide, even they are claiming that their material is food grade. So I'm glad that the recycling industry in the country has improved a lot. Earlier, such kind of material was only available in Singapore or Thailand and such countries. Now it's available in India, and the process they adopted is very, very suitable for easier recycling in injection molding. So that process has started, and our company is foreheading this development also with companies like Asian Paints and other MNCs.
Yeah, so I'm continuing into that. So are we buying those recycled plastic, or like are we only trying to create those from secondary market products? Like how are we doing it currently?
No, there are recycling companies which have set up in different parts of the country, one in north and one in Daman area, and they are able to supply reprocessed, cleaned and regranulated material directly. So we don't do that process. The process is done by a third party who offer that material back to us. Back to us means to us, and then we use it in our compounding.
Yeah. How much is the cost price difference, like a normal one and the recycled one? Like, does it make
as I told you,
much
the
of a cost
difference is hardly 15%. But the idea is not only the cost difference, but also getting into the recycling, which is a point of concern for environmental angle. So some of the companies like Asian Paints and others who are very concerned, and like us, we are also concerned about controlling bringing in more recycling. So we are working closely with them to adopt this material.
Yeah. Thank you, sir. That's it from me.
Thank you. Again, if you have a question, please press star 1. The next question comes from Mrunal Shah with Axanoun Investments. Thank you. Please go ahead.
Thank you for the opportunity, sir. I have two questions. First, can we have the EBITDA margins for all the category like IMN, non-IMN and IBN? And second, can you throw some light on company's succession plan if we have any? Thank you.
Yeah. See, coming to the EBITDA margins on a segment-wise, I may not able to provide right now, but the EBITDA margins of thin wall food are the highest among all 4 sectors, that is paint, lube, square packs and thin wall packs. Probably if you send a mail, I'll ask my finance department to give you that breakup. But roughly if you want, I can say that the paints EBITDA margins will be somewhere around 30 to 35 rupees per kg. Lubes also will fall in the same category. Square packs also fall similar to, maybe better, 35 to 40. And then thin wall products, it's as high as 80 to 90 or even 80 to 100 rupees per kg. So the overall blended EBITDA is around 43. That is your answer to your first question. Coming to the succession plan, I'm very glad to inform you that you might have also interacted. My son Rana Pratap, who is from IIT Delhi and IIM Lucknow, has been in the company for the last 8 years. He and Mr. Sandeep, who is also son of our Deputy Managing Director, he's a MBA from Purdue and BTech from IIT, not IIT, REC Kurukshetra. And he's been in the company for the last 9 years now. He's completely looking after production planning and controlling and coordination, while Rana Pratap, who is my son, is taking care of marketing and new business development. And he is instrumental in actually getting into IBM and new product development. He brought in a lot of MNCs, especially Hindustan Levers, Procter & Gamble, GSK, are brought in after he has taken over the marketing the last couple of years. And they're also involved in project management, selection of the molds and the machinery. I think they're getting well groomed, and I'm confident they'll be in a position to succeed and take the company forward.
Thank you.
Thank you. The next question comes from Hitesh Tong with ICICI Direct. Please go ahead.
And thank you for the opportunity, sir. Sir, my first question pertains to overall volume growth during this quarter, or overall volume, if you can give us, sir.
Yeah, volumes are flattish because there was a big drop in, not a big drop of 6.3% in paint, which contribute more than 55% to our company. So there is a drop of about 2%, 2.5% drop in volumes in this quarter compared to the Q2. And whereas the volumes have gone up in the case of thin wall, that is up by 67% compared to the, is this compared to Q2? Or 12%, is it? Yeah, there's a 12% growth on compared to Q2 in the food segment, that is thin wall segment, whereas other segments have registered, paints have registered minus 12% in volume terms. Lubes have registered positive, actually. They have gone up by 15%. So overall net it is around 2.5, 2.6% drop in the volume compared to Q2.
Okay. So, sir, we have seen a good traction in the lubricant segment. Is it a kind of a one-off event, or will it be kind of a sustainable demand you are looking at this segment?
See, in
due to
lubes,
product change or anything else?
We never hope lubes will be a great winner because lubes are getting more and more stagnant. And in fact, by getting into our public sector, that is BPCL, is where we have seen growth. The main reason for our Q3 growth in lubricants is public sector companies, which we generally don't get tenders. We got the tender for BPCL 6 months ago, and they started picking up the numbers from September, October onwards. So the growth what you see in lubes is mainly because of BPCL 2-year tender we won recently, which has started picking up from October onwards. So that is the one reason for lubes growth. But in lubes, through QR code, we anticipate growth coming our way. because once they adopt QR coded container, because loops are the most affected by counterfeit, next to paint, I can say after loops it is paints. The number one product which has been, counterfeited in the country is lubricants. So they are very much interested in adopting our QR coded IML. Unfortunately, because of this COVID situation, their plants, neither their plants nor their marketing teams are actively coming physically to the office to adopt this change and test the change in the market. Any moment there is some couple of months of peace resumes from this COVID, I'm sure they all will go for it because they already now understood what with the inside IML code can do. Even the IT part of that controlling of counterfeit, which I explained in my previous talk, are all ready now. So we have now tied up all the loose ends, both on the hardware side and the software side, because this is a kind of digital packaging where sitting in the office, the clients can monitor which pack is lying where and when it is sold, and they can ensure that that repack will not be sold again because of the counterfeiting control they get through the QR code, hidden QR code and outside QR code. So all these concepts are ready, but unfortunately with the COVID going on, physically they could not test it. I'm sure once normalcy comes, they all will go for it. That is when I anticipate growth coming in the loop sector, a real growth.
Okay. And sir, earlier you have given a guidance of volume growth of around 20% for the next 2 years. Are you stick with the same guidance, or you can?
We are aiming at that. We are aiming at that. This year we are at around 14% for the 9 months. Our volume growth is 14%, and hopefully we may end up similar or maybe 13 to 14 because the fourth quarter also. We may look at around 10% growth is what looks feasible. So overall, we may end up the overall year at around 13% is my guess. But next year, our IBM products will start, and many new products for MNCs in food sector, food and FMCG, mainly food sector, are on the anvil. I can't tell the names today because the orders are about to be received, but we have struck deals at least for 4 products, which will contribute handsomely to the food and FMCG, that is Tinwal sector, from April, May onwards, because the mold development will take 3-4 months. So hopefully from May onwards, those 3-4 products will be added to our Tinwal segment, and they will be contributing considerably in the next financial year. So we are aiming at 18 to 20% volume growth again next year if no pandemic and things go smooth.
And sir, what was the pump revenue in this quarter, sir?
Yeah, pump revenues are now picking up. They are just about 1 crore rupees in the quarter. But we have now got the clearance from Hindustan Levers just a few days ago, and supplies will start from next month for HUL. Ricket Benkazer and Himalaya, again, these 2 players are also impacted by COVID, some of them, and they could not visit for the final trials. So, but their corrections were done, and their models, every pump has a small minor dip in the caps on the outside actuator. So those corrections were made and submitted. So once that is cleared, Himalaya and Ricket Benkazer are also expected to add volumes. As I said, hopefully from April, there will be at least 100 to 150% improvement in the pump sales.
Okay, good. And sir, my last question will be, recently we have done a QIP, and from that QIP, the promoter stake has reduced another 1% on a Q&Q basis. So, sir, is there any plan to increase the stake, or what is your take on that, sir?
Yeah. See, you have correctly noticed that there is a drop in the promoters' holding after the QIP. There are warrants which are getting converted in the month of April, May this year, 22, wherein promoter stake will come back to almost 33.7 to 34%. So we'll be back to the previous levels of 34% after the warrant conversion.
Okay, great, sir. Thank you from my side. If I have more questions, I will come on the queue, sir. Thank you.
Okay.
Thank you. The next question comes from Akshay Chheda, with Canara Robeco AMC. Thank you.
Yeah, so first question would be, sir, if I have to look at the EBITDA per kg, so last 4 quarters, I mean, it has been on the improving side only. I mean, 41.6 to 42.2 and then 42.5 and now 43. So but at the same time, even the RM was on the inflationary trend. So assuming that the RM stabilizes, then how should we see as a sustainable EBITDA per kg? I mean, this is the question before the pharma starts, because pharma will again have some positive impact on the EBITDA per kg. So just your comments on that. That will be my first question.
Okay, I'll answer this. EBITDA increase is mainly due to the increased sale of our food and FMCG. In spite of drop in volumes of paint and overall quarter, why we could make a better EBITDA margin was there is a jump of 38% in tonnage wise compared to Q3 on Q3 in the segment of thin wall food and FMCG. So that is the main driver of our growth as of today. And pumps is a second segment which will add to higher EBITDA margin, as high as food and FMCG or maybe better. And as you correctly said, once we start pharmaceutical or even OTC products in IBM, that is maybe starting from May, June onwards, we will certainly have much higher EBITDA margins coming from those product range. So with the improved sales of thin wall, pumps, pharma and OTC product packaging, our EBITDA margins will gradually improve. How far it will go all depends upon the growth what we achieve. I am very confident on at least these 2 segments, that is thin wall, food and FMCG and pumps for the next year. Why I am saying IBM and other products may take little time, because the volumes in the beginning won't be really sizable to make an impact. But during the year or maybe second half or maybe in the year 23-24 onwards, you will see a IBM segment, that is pharma, OTC, cosmetics, also contributing to improving the EBITDA from the current levels. So while the next 1 year growth comes from thin wall and pumps, 23 to 24 EBITDA margin improvement per kg will come from IBM and their related products.
Okay. And so second question will be if you can provide with the value and volume breakup between IML and non-IML for Q3.
Volume, IML and non-IML is nowadays is getting stagnated, because whatever could change have changed. We are at around in tons wise 65.5% as against 62.5 last year.
Mm-hmm. Okay.
And the 9 months period, we are at same level, somewhere around 62.5%. 62, it becomes 62 now. So as I told you that unless some of the existing screen printing brands shift to IML, overall IML growth is only coming through thin wall and food segment, which is 100% IML. So in the paint and lubes, there's still a stagnation in terms of increasing of IML adoption, but we may have some good news in the couple of months with some of the our paint and lube companies looking at IML through QR code or otherwise.
Okay. Thank you, sir. Yeah, that's what from my side.
Thank you. The next question comes from Vijay Karpe with Bryanston Investments. Please go ahead.
Thank you for the opportunity. Am I audible?
Yeah. Little low voice, but.
Yeah. Thank you for the opportunity and happy new year to the entire team of Moltek. My first question is, what is the capacity of the new which we are setting up for burger, and when will it start? And are we in talks with Grasim?
Sorry?
Are we in talks with Grasim for the paint division?
Sir, your voice is not clear.
That's my question. Are we in talks with Grasim for their paint division?
Jockey?
Grasim Paint.
Oh, Grasim. Aditya Birla Group.
Yes.
Yeah, the capacity for Berger plant at Lucknow will be decided in next few months, but the construction of the new plant will start only from middle of this year because they also deferred their production plans, I think, to the second half of this year. So by then we will be meeting their needs from our existing leased premises already set up near Kanpur. And at Sandoli, where we have taken land next to Berger plant, that plant will be constructed during the financial year 22-23, and that will be minimum of 2,500 tons capacity to start with. And your second question, we are in touch with ABG, but no confirmations of working with them as of now. We are working.
Great. And what kind of volume growth do we see in FY23 and the capex for FY22 and FY23?
Yeah, capex wise, we have major plans in 22-23, wherein we have to complete our IBM major plant and Kanpur plant for Berger, and probably another new plant for a new client, and expansion of our Vizag and Mysore. So there will be considerable investment coming up in the year 22-23. Already started at Sultanpur with the construction of the building there. And the pilot plant at Unit 1 is nearing completion. So in the current year, we may end up with a 50 crore investment. Currently, already we did 36 crores. And about 11 crores of balance payables for the machineries that are ordered is already there. That means and construction at Sultanpur and other areas and molds will take the investment in the current year to around 55 crores. But I see next year it will be much more in the tune of 70 to 80 crores depending upon how the IBM product demand opens up. So for Kanpur, for the Berger, it is a capacity of 2,500 tons to start with.
And what kind of volume growth do we see for FY23?
We are aiming at anywhere between 15 to 20% because in IBM and other products we may not see sizable contributions, but as I told you, some of the major product wins we made in Kinwal recently, which will go into production from May onwards, might add considerable numbers in that sector again. So hopefully we should be seeing a 15 to 20% growth during the next financial year.
Sir, volume include segment-wise for paint, lubricant, and SNS?
Sorry, what is the breakup you mean?
The volume absolute numbers for paint, lubricant.
Yeah, in terms of absolute numbers of 160 crores, 87 crores is paint, 37 from lubes, and 36.5 from food and FMCG.
Volume numbers, right? I'm asking.
Volume-wise, 4,200 tons from paints, 1,800 tons from lubricants. The balance about 1,320 from food and FMCG.
Great. Thank you for answering that.
Thank you. The next question comes from Vivek Tolat with Acme Family Office. Please go ahead.
Hi, sir. Sir, could you actually give us a more, better idea of the timeline for the expansion in Mysore and Vizag and how much we are taking our capacity ahead for? That was my question number one. And question number two, sir, if you could give us a broad, how we propose to use the 100 odd crores that we have raised from the QIP, given that, already the business would throw in about 60 to 70 crores of cash every year. So do we see that, QIP amount also going into additional capex? So, how do you propose to use that, sir?
See, in Mysore and Vizag, the expansion is already underway. The buildings are ready, and additional machines will be added as and when Asian Paints indicate their growth. And at Vizag, we are even planning some of the products manufacturing for Castrol Calcutta, which will be supplied directly from Vizag to Calcutta, which will save freight and time for supplies. So these two plants expansion might involve about 20 to 25 crores in the next 1.5 years. In this year, probably half of it in the next 6 months or 9 months, and then followed by the balance 50% in the next 9 months, because by 23-24 we are supposed to have 6,500 tons. That is the projections given by Asian Paints at each plant. Currently, we have about 3,500 to 3,500. So we need to almost double our capacity in these two plants in the next 24 months. So accordingly, there will be investment to the tune of about 30 crores in both the plants put together.
Okay.
And coming to the QIP utilization of funds, as I told you, we are now getting into a major segment, that is IBM, and we foresee IBM and other similar products of OTC, not necessarily in IBM technology. It could be in injection molding, it could be in multicolor injection molding. We are keeping an open mind, but with IBM as a thrust area for regulatory pharma and other OTC products. Along with it, we are also going for ISO 15378, that is a pharmaceutical standard for OTC products, like Vicks Vapor Ups or Vicks Inhalers or Iodex or all these products which are like Himalayas, Live 52 and such products. They need to be produced in 15738 premises. Currently, most of the companies are procuring from just ISO companies, which is not good enough. And government regulations are becoming tighter and tighter, wherein they are insisting on IS 15378 facility. Very few companies have such facility in the country, and we are ramping up that facility at Sultanpur along with our IBM products facility. So this will enable us to enter into high value added OTC counter products also, which may have IBM products or which may have injection molding products or by molding, double color or triple color molding products. So the idea is to enter into OTC products during this phase, wherein we may foresee a sudden improvement or jump in investment requirement anytime in the next 6 to 9 months. So that's where these QIP monies will be invested. But anyway, they plan to invest about 200 to 250 crores in the next 24 to 30 months. So with this plan in mind, this QIP has been raised, and already projects underway will be requiring at least 80 to 90 crores in the next 12 months. And additional OTC products, their molds requirement can come. And we are also planning to expand our tool room capacity and printing capacity during the next 9 to 12 months. That will need another 25 to 30 crores. So in my opinion, 22 to 23, we are just making the budgets. We made them at the time of QIP. So they are about 100 to 120 crores requirement may come up during the financial year 22 in the next 14, 15 months. So that is where cash has been procured from the QIP issue, and that will be in the next 14 months.
Okay, understood, sir. If I can squeeze in one more question, sir, with regards to our thin wall containers, what are the next, future areas of growth? And over the last 2 or 3 years, we've converted ice cream containers. For a brief time, we had edible oils, but as the more strategic level, what are the future areas of growth that we think, are possible conversions in the next 1 or 2 years, if you may?
See, nutraceuticals, beverages of nutraceuticals. You have jams, you have butter and cheese, you have dates, we have various FMCG products like detergents, children products. So all these are where we are now stepping into because there is a concern for more and more hygienic way of manufacturing in the country now. Not only it's been very late, I would say, because in many countries, these kind of standards were practiced for quite some time. We are a little late to get into that in our country. But all the MNCs have now set up standards that going forward, they will not make these products in ordinary conditions. They have to have IS 378 or FSS certified premises, or even DMF certified in case of regulatory pharma. So going forward, we see that these nutraceuticals, beverages for children or even patients, protein powders, jams and cheese and other products. Where there are some cheese and jam, there are some brands which have shifted, but not all. So these are the areas where we would be concentrating. There will be some exotic caps and closures which are requiring high-end technology. We are open to enter into those segments. So as we mentioned at the time of QIP, we are looking, not restricting ourselves to just containers and bottles. We are also open to look at value-added injection molded or IBM products. And we see a lot of opportunities. I can't convey some of them because they are at a drawing board stage, but definitely they will be value-adding in nature, higher value-adding in nature.
Okay, thank you, sir. That's all from my end.
Again, if you have a question, please press star and 1. Thank you. The next question comes from Krishna Yetapu, an investor. Please go ahead.
Good evening, sir. Like high-tech in paint, do you see any large competition from food and FMCG space?
See, definitely competition will be there in all segments. It's not that we are monopoly in even food and FMCG. There are a couple of players, as I said, caps and cones in the north, and a couple of players in the west are there for the last 5-6 years. But we have the best backward integrated facility, which any MNC or any volume business player will be looking at. Because having an IML robo or having a mold is not just enough to ensure trouble-free supplies. In injection molding, the machines, robos, they all work in very high temperatures, very high pressures, and they run 24/7. So they're all prone to maintenance, they're all prone to breakdowns. So a company like Moltek, which makes its own molds, which makes its own robos, and even labels, is only capable of handling these maintenance breaks without the pain being felt. So that is why even today we are the single source supplier for some of the companies, even if they buy millions of components every month. So that is where our strength lies, and in that strength is getting more and more fortified with the addition of new 5-axis deep boring and milling machines we imported from Europe in our tool room, and also high-end Italian machines with reverse QR coding facility, which we have imported last year. So like this, we are creating industrial standards, and this QR code reverse printing is something which, in my opinion, it will take few years more for any of our competitors to follow. So keeping these kind of barriers and getting into higher value add segments is a way forward for us. So even a competition comes up, we'll be in a position to maintain our leadership position.
Sir, on that front, in the past you have mentioned that the reason for foreign players not entering Indian market is there is not enough traction in IML space. But at present, there is a lot of opportunities. So how do you see the risk of foreign players setting up facilities in India?
See, even foreign players, if they set up facility here, none of the players are so much backward integrated like us. They buy IML from outside, they buy robots from outside. Some of them buy even molds from outside. Some of them make their own molds. And their costs are so high that they will not be able to play with Indian costing and Indian pricing, which we have absorbed and survived, or rather, mastered in the last 30-35 years. So that is one of the reasons why foreign players with IML technology don't look India with interest. Even if the volumes go up, their pricing and the pricing of our Indian companies, what they pay, will not work out. In fact, we are now setting up a small export cell in our marketing department. 2 persons have been shortlisted for that. And we are trying to find opportunities of exporting thin wall containers or even pumps and our IBM products to as far as USA. We are even in touch with a Chicago-based company. But these are all at the initial phase of discussion. So the companies coming and setting up plant in India for IML products, I don't see a great threat in that. Even the volumes of IML adoption is increasing because of the pricing standards in India they cannot meet.
Okay, sir. Great to know that, sir. And my last question is it possible to get EBITDA breakup by sector? So paints, or what is the EBITDA margin?
I don't have the data immediately, but I can give you a ballpark. In the painted loops, it will be in the region of 30 to 35 rupees per kg. In the square pack, it may be around 35 to 40. In the thin wall and pumps, it will be in the region of 80 to anywhere between 80 to 100 rupees per kg.
Okay. And sir, as you said, we are adopting using technology of using recycled raw materials. I'm assuming that there won't be any margin increase because of that, right?
No, really. In fact, there could be an improvement because when we use the seconds material. There is a technology that goes into in molding where we adopt that without impacting the quality of the end product. So I don't see that will be in margin reducing or anything. It could rather be beneficial to us.
That's it from my side, sir. Thank you.
Thank you. The next question comes from Chandrika Venkatesh, an investor. Please go ahead.
Hi, I'm Siddharth here. I have a few questions. My first question is, dispenser pumps are a commodity item. There are a lot of manufacturers of dispenser pumps in India, and there are Chinese imports also. So in this competitive segment, what advantage do you have? And how will you compete with your competitors in this segment? And in 3 years, what kind of revenues and EBITDA margin can we expect from dispenser pumps?
Is that all? Okay. So that in the dispenser pumps, the advantage we have started with is the high cavitation, high productivity molds. While our competitors like Reiki and others, they have at the most 16 or 24 cavitation molds. We are using 36 and 48 cavitation molds, which will produce much higher productivity per crore of investment, or either way you look at it. And another greatest advantage we have started with is the design is compatible to give the best leak resistance and higher number of shots, withstanding of more number of shots. And the assembly line which we have adopted is completely automized, and right from first item to the last are all, including the dip tube, are assembled online, and they were tested 100%. Most of the companies currently in India, they test by batch model or by random sampling, whereas our pumps are tested 100%. That is the reason why we could get within a year approvals from Wipro, recently from Hindustan Levers, and Himalaya and Tek Packaging are at the final stage of giving us clearance. So we are able to get into the likes of these top MNCs because of our quality and the adopted technology. In 3 years, we envisage the full capacity, that is around close to around 85 to 90, you can say 85, 8.5, 8 million pumps, 80 million pumps per annum. That is with a price averaging around 6 to 7 rupees, take it 6 rupees, we will be able to reach around 50 crores turnover with a EBITDA margin better than what we are currently doing.
My next question is, in IML packaging, your competitive advantage is that you have everything under one roof. You make your own mold, you have your tool room, you make your own robot. So this all under one roof model reduces your cost of production and also makes you a very reliable. This is your competitive advantage in IML packaging, as I understand it. Have I understood it correctly? Am I right?
You're correct. That's what I answered to the previous question. Our ability and completely backward integration right up to robos, right up to IML labels. Because if we make 10 million containers in a month, I need 10 million labels. And buying 10 million labels at whatever margin or whatever risk of inventory, losses would be causing our competitors pricing pain, which we can control because we manufacture all of them in-house. So that is the greatest advantage which we have over the competitors.
You are the largest IML player in India, but globally there are bigger players also. What stops these global players from entering into the Indian market and competing with you? Why can't they enter India and compete with you? If they do that, how will you compete with them?
See, as I again answered just a few minutes ago, the IML global players are not completely backward integrated like Moldtech. Even you take Jockey Plast, they make their own molds, but they don't make their robos. I think they don't even make their own IML labels. So they have to procure the labels, they have to procure the robos and compete with Moldtech in India. The Indian pricing system will be a much bigger challenge for them than to us.
You answered it. Okay. In the IML business, you have two great growth drivers going ahead. One is food and FMCG taking to IML, and the other is paint companies taking to IML. These are your two great drivers for IML in the future. Am I right, or are there other drivers also?
You are correct, but there is one more driver, that's QR coded IML, which we are introduced recently, which will also have a hidden QR code underneath the IML with a provision to tear it off at the time of sale. So that will provide complete anti-counterfeit for the many clients who are suffering from the anti-counterfeit and tampering in our country. So that QR coded IML is what is getting introduced now in the country. The first orders have been received from a aqua food nutraceutical manufacturing company, which is getting into the market in the month of February. And many lube companies are examining this, and they are about to enter into using this QR coded IML. So that is another area of our growth we envisage.
Last question. Okay, just two questions. You are planning to enter the injection blow molding segment. Now that is again a very competitive segment with a lot of players already. What competitive advantage do you have in that segment? And within 3 years, what kind of revenues and EBITDA margins will you achieve in that segment?
See, again, the same advantages, even in IBM, where we see our tool room, our strengths in molding and tool manufacturing and maintenance, and even robotics, where we are introducing IML capable machines, IML attachable machines we are getting from, we are importing. And these machines also will be having molds made by us in future, not in the first phase. First phase we are importing these molds, but ultimately we'll be making our own molds and even labels for IBM IML products. So this same advantage what we enjoy in injection molding, we want to replicate in IBM. And in IBM there is competition, but there is not much of competition with backward integrated facilities. They are all standby operators with machines, molds, everything imported. And there we can again show how we can do better in productivity and profitability.
Thank you. The next question comes from Karan Batelia with MSEC. Please go ahead.
For the opportunity. Sir, like I understand, we see a clear 4 times asset turn on the pumps business model. So what kind of revenue assumptions we have for the QR code and IBM project? So can you help me with the total investment that we are doing as of now and the peak revenue potential for these 2 projects?
For QR coded, the same EBITDA, asset turn is possible, like 3 to 3.5 maybe. But in the case of IBM, the value of the product is not so high. So probably it will be in the region of 2.5. But until we really get in and start manufacturing those products, I'm not able to exactly give you a picture.
Right. And for us, the QR code keeping was somewhere around 50 crores, correct me if I'm wrong?
Sorry?
The total capex for the QR code was somewhere around 40 to 50 crores?
No. For QR code, it's hardly 10 crores for the printing machine, which is again a versatile machine. It not only prints the QR code. If you don't want it, you just switch off that feature and it can be used for your regular IML.
Right. Sir, and any updates with respect to the Zomato, Swiggy, container packs or something with PVR, Inox, anything material out there?
PVR, we have a first orders for some of their products. Swiggy and Zomato are still on the wall. They are not yet decided. They have been in discussion with us for quite some time. But some of their major restaurants, they are pushing them to adopt our containers where the volumes are sizable. So indirectly we are getting business of Zomato and Swiggy, but not a direct order from them.
Right. Got it. And just one clarification, volume growth quarter on quarter is a decline of 2.5%, right?
Yes. Actually,
okay.
Historically our Q3 is always lower than Q2. Only last year it was an aberration because after the major COVID impact last year, the Q3 was better than Q2 last year. But typically if you look at 18-19 and 19-20 also, our Q2 is, Q1 and Q2 are higher. Again, Q3 will be a dip and Q4 will be the best.
Correct. That's what. Thank you for answering. That's it from mine.
Thank you. The next question comes from Pulkit Singhal with Dalmus Capital Management. Please go ahead.
The opportunity. So you alluded to how backward integration allows you to be the lowest cost manufacturer for a pretty low price country. What is preventing us from therefore competing in a global landscape in a much more effective manner? What would be the challenges? Because you already have relationships with some large MNCs.
Yes. See, the point here is trying and exporting from India is the way we want to go forward. And that's what I answered to in my previous questions, that we are looking at exports as a major opportunity hereafter because more and more smaller components, the China plus one concept is coming in the minds of Europeans and Americans. There are many more inquiries than there were before in terms of the small components like closures, like pharma bottles, or even thin-walled ice cream and other cheese and butter packs, which can go one into the other and thereby saving on transport cost and effective landed cost will be much lower than their local manufacturing cost. So having said that, the export itself is a good opportunity to drive, and having a limited bandwidth of management and I would say technical people, venturing into setting up plants outside may be a little too early for us. And because we had a bad experience with RAK, but that is not a correct example to take because at that time we are mainly moved there with Iran in mind for their paints business of lubricants and oils, which has boomeranged because of US sanctions. But anyway, the idea now is to explore those markets through exports from India.
Right. Would it be fair to say that you have not explored this opportunity much before? Sorry, I'm not well aware of your historical.
We have been down with local developmental work and not really concentrated on exports. And with the pandemic and concern about China being kept as a single source all these years, Americans and European companies are looking at India with more additional interest. And the inquiries what we are getting and the response we are getting from those companies is much overwhelming than what it was few years ago. But anyway, the fault lies on our side also. We are not aggressively taking exports. But going forward, we are slowly creating a team which will focus on exports and which could be of better value add.
Sure. And so in the global landscape, how much, I mean, for the products that you manufacture or that you can export out of India? Hello?
Yeah.
Yeah. How much does China contribute in terms of, the percentage requirement of the global demand for the products that you manufacture?
Plenty. I would say more than 40% of US and European products, 30 to 40% of such products of injection molding, thin wall containers, pumps, closures and caps are procured from China. So even if it's 30 to 40%.
Yeah. 30 to 40. And what could be the TAM, your target, addressable market for the products that you manufacture currently in your own assessment?
I don't have exact figures for that. We are using Dun Bradstreet for some support in export data, but I don't have exact numbers as of today, but it's considerable. The numbers run into quite a few millions or close to $1 billion also.
Right. So lastly, what competencies do you need to build? Like what action points do you have and what could be the timeline to see this opportunity on exports that you could probably address?
See, what are the advantages, what are the true requisites we already have for export? What even an exporting or importing client would look at us is our ability to continuously give supplies without hindrance and consistent quality. So we have proved ourselves with Mandalis or Hindustan Levers or GSK that we are a reliable supplier. Even we are a single source, millions of containers are being supplied from us without they thinking about developing a second source. So that kind of reliability is one thing which we have already established. And as I again say, the backward integrated facilities of even developing them or developing a design studio where we have a design studio to develop 3D rendered images of products before they are produced and giving them rendered 3D images and videos to the client, enable them to get a clear idea of what is it going to be. So that they won't even get in all the packaging companies, even in USA or Europe. So I think we have all the prerequisites. The only thing is lack of attention on this count. And once more, I want to give this credit to my second generation, both Rana and her assistant Kavya. Both of them are concentrating on exports now. And they initiated creating a team and even had a couple of talks with the US-based clients recently. And they see a good future maybe in the next few quarters.
Great. Thank you and all.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time, we will take a final question from Karan Batalia with MSEC. Please go ahead.
Just wanted to understand how is our working capital shaping up, given the fact that many of our clients are mid-size and small size. Any major deviation we've seen?
See, working capital, if you mean debtors, we make sure that all small and medium players pay either in advance or along with supply, so that we don't get into write-offs. And major clients, they generally demand 60 to 70 days, 75 days on average credit, and their payments are also completely assured. So if you look at our P&L, there are hardly any write-offs. There will be few lakhs, but not sizable.
Right. And while you mentioned the volume breakup of IML, non-IML, can you also help us with the value breakup?
Yeah, value breakup is 68% IML, 32% non-IML. It was 65% last year, 65.4, and 34.5, which has now become 68.3 and 31.7 in terms of value. This again because thin wall sales have grown in the last 1 year compared to Q3 of last year.
Got it. Thank you. That's it.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Abhishek Navalgund from Nirmal Bang Equities for closing comments. Over to you, sir.
Yeah, thank you, Lakshman sir, for taking all the questions, and thanks to all the participants for joining in. Now I would like to hand it over to Lakshman sir for his closing comments. Thank you, and over to you, sir.
Thanks, Abhishek and Nirmal Bang for holding this conference, and thank you all the participants for your interest in our company and for actively participating in the questions and of course learning more about our company and future plans. And I wish you all the best and take care. I think we are again in the wave of Omicron, but it's not so severe, thankfully. Hopefully there won't be any more variants and we all live peacefully after a couple of months at least. Wish you all the best and take care. Thank you.
Thank you. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.